Welcome back to Income Trading 101. Today is June the 29th, 2021. We're going to take a look at SoFi, symbol SOFI, Sierra Oscar Foxtrot India, for those of you who follow. And I've already set up the moving averages. We have our three moving averages, the 10-day, the 20-day, and the 60-day. And I'm using TradingView as the charting software. This software is amazing. I might do a tutorial on it here soon, but for those of you who have not already, please do subscribe to the channel. It really does help me out. I appreciate it. Thank you to those of you who have passed the video along, shared it with friends. I have seen the increases, and you guys are awesome. So let's dive in. So on the daily chart, I'm looking at daily data right now. You have a bit of consolidation, mostly because of the gap moves. I mean, this is really, look how big that bar is. This has really moved around quite a bit here recently, and you have a situation where the 10-day is in between the 20 and the 60-day, so definitely a period of consolidation. Let's see how it looks at the smaller time frames. And for those of you who don't know, the green line is the 10-day, the red is the 20, and then I have 60-day set as yellow. So let's take a look at the 1 hour and get a sense of where we are here. Oddly enough, we're still consolidated at the 1 hour point. So I'm right now looking at the numerical values in the upper left-hand corner. You have the 10 period at this point is $19.10. The 20 is $18.86, and the 60 is $20.92. So that means that the 10 once again is between the 20 and the 60, which is a period of consolidation. And during a period of consolidation, I typically will not use moving averages as a trading indicator, because you can really get chopped up. Let's take it to a lower time frame even. Actually, I didn't want the 45. I really meant to 30. Wow, we are 3 for 3 right now at the 30-minute chart data. You still see that there's consolidation, with the 10 being between the 20 and the 60. And just for a little grin, let's see. Ta-da! Consolidation still. I don't know if you guys can see that, but even at the 15-minute, the 10 is between the 20 and the 60. So that pretty much wipes out using a moving average as a clear trading indicator. Let's kick this back out to the daily data and see if the MACD is going to give us any more indication of where price might be going. I like the MACD. It's my kind of stochastic oscillator of choice, and it does take into account exponential moving averages in the calculation of that blue and the red line. So for those of you who prefer exponentials, I do get use of exponentials when I use the MACD. And if you don't understand how all of this stuff is calculated, whether it's the moving averages or the MACD or even the Fibonacci, in the description for this video, there's a link for a video on YouTube called How to Trade Stock Using Technical Analysis. Take a look at that video, because I really did go through and create like a mini technical analysis tutorial. It's a great video for those of you who are new to this game, or at least want to understand it a bit more. So when it comes to the MACD, we see there was a bearish crossover back here in February, but then a bullish crossover in the negative territory back in March. And you can see we did not go above the zero line. This is like casebook study or textbook study. We didn't go above the zero line for both of them until May the 24th. So we crossed back around March the 15th, and we spent the next 2 months and a week basically going sideways. And you can see what price did during that time period as well. It's just sort of up, down, but it did slowly head lower, which is interesting. You have lower highs and lower lows during this period, but this was a bullish crossover. And this is the reason why it's really important to understand the indicators, the analysis tools that you use, because during periods of extended or of basically the continuation of a trend, the MACD will go sideways and not pop through. So you can see as of the 24th or so, it went ahead, both the signal line finally crossed over into positive territory. The MACD, the blue line, had already done so, and it was just in time. You get this pop here, and then we've recently had another on the 15th of June, so a couple weeks ago, we had a bearish crossover, and but we've not yet crossed the zero line. And that's all on the daily. Let's take a look at the hourly. In the smaller time frames, the more you'll get oscillations, so sometimes it's a challenge to use. So you have a crossover on June the 10th. That would be a bearish crossover, and a few days later it did go into the zero, cross the zero line. But really, this blue line happened 2 days later, so you wouldn't have had very long to be able to get short that market. This is a bullish crossover that we see here on June the 16th, and it crossed over the next day, crossed into positive territory. Then we got another bearish crossover on the 21st, and that on the 22nd in the afternoon, morning / afternoon of the 22nd, we crossed the zero line, which is where I would have looked to get short. And really, we haven't had a true bullish crossover except for here on the 28th. That was yesterday. We had a bullish crossover on the 1 hour. But look at this. We've kind of tailed off. We haven't gone back positive, which to me is typically a sign that the last trend is about to continue. And that would be a much more bearish trend on this stock. Let's look at the 30-minute. So 30-minute level, you had a bearish crossover that happened on June the 18th. I'll move that over just so you can see. June the 18th. And it went on and crossed over. You had a bit of a bullish crossover on June the 23rd, but it never crossed the zero line and has just trailed on off. Another bullish crossover here on the 28th, and it's not quite. The MACD, which is the blue line, you can see it did just barely cross into positive territory, but it didn't stay there. It pretty much waited and is hanging with the signal line right now. So, again, I would not... Without it crossing the zero line, I would just assume that a continuation of the previous trend is going to continue. And then, wow, I don't use the MACD at the 15-minute level just because it really whips you around, and you really have to be aware of the nuances of using this. Like when it's going sideways like this, just assume that the previous trend is going to continue, which it did. And then there was a crossover. Crossover happened here on June the 25th, and we sort of oscillated still below the trend line or below the zero line, which allowed that negative trend to continue. And then we did get a bullish crossover on the 28th, and that crossed over the zero line back. Both of them were over the zero line by the 29th. So, you know, if you really are up for learning to use the MACD on such short time frames, I think it just ultimately takes like hardcore practice. And if you're not going to practice, it's probably not the tool for you to use at lower time frames. I would definitely just stick to the larger time frames because I think it gives you great data, all the indication you need. Literally, you could use the daily and just go from there. So let's get rid of the MACD and just take a look. Let's take a step back and just look at this. Like, just look at it. I'm going to draw some fun lines and some, first I want to draw some channels. I love parallel channels because it gives me an idea of what was going on, what was going on during different time frames. So I can get a better sense of again, where the stock has been and where it may end up going. So I'm just going to mark all of this up. I mean, wow, right? Got another one here. You don't have to mark up your charts this way. I mean, you can. I do it just because it lets me right off the bat understand what's going on, where this has been. Some of the trading strategies that you can use when you've got this sort of movement is you end up, we'll look at it towards the end of this, but you end up expecting price to continue in a direction. and then the moment it doesn't, you go ahead and make your trade. So maybe that's getting long or short or whatever. But I mean, so much here. Let's get rid of that because that's kind of confusing. Let's see. Is there a Fibonacci analysis that's worth doing? Let's do one anyway. So I'm going to take it from the start back here in December all the way to that tippy top that we saw in February. I'm just going to drag this across just to get a better sense of where we are right now. So right now, we almost bounced off the 61.8% retracement of that previous move. However, you can look and see that we actually went 78.6%, right? So which one of these is most relevant? Well, it depends. I like to look at the chart and let the chart tell me what's relevant, right? When you start seeing recurring themes, price ranges that matter across time, I think that's a key indication. So this $19.41 area, for instance, you can see it played resistance here. Briefly played resistance, but not really. We had a gap move around it back here, January 27th, but just extending this, it played support a little bit here, and we are right around that range at the moment. So we could see anything. We could see it play resistance or support. Let's do one more thing. I want to get a sense of how much of a retracement we got off of the last retracement, which you might say like, hey, that's really overdoing it. You're looking at a retracement of a retracement. But yes, I am. Look at this, $20.68. You know, that's almost a resistance there. We almost had some resistance there, some support here in June, support last week, or a couple weeks ago in mid-June, gap move around it. So this is the reason to do multiple analysis. And one of the best things with Fibonacci, sometimes you can do it over an entire region and just see, are there any lines, any areas that are that are right on top of each other? Because those also tend to play, that tends to be really important. So clearly there's some importance between that $18 and $19 range, which is kind of where we are now. Similarly, between the $21.35 and $20.68. I mean, you might say, hey, that's not that big of a move. That's like a 50-cent difference, right? Or 70 cents, really. So something that tight, it lets you know there might be some important levels in there. And let's just do this. I'm going to clear this. And instead, I'm going to draw. Okay, I'll tell you what. I'm going to draw a little rectangle just to kind of highlight those regions. It's funny, I don't even have to fully know where they are. I can kind of see them here. I mean, and even tighten it up a little bit. A little bit of a region there, right? Can certainly get another one in here. You can definitely argue that being a consistent, what do you call it? A consistent level of support, or sorry, resistance. There you go. Make it pretty. Make it pretty. And then, so there you go. I mean, you just have to kind of, these are all, there's no such thing as sort of the perfect region, but the main thing is that you can see it on the chart and it gives you an indication of where things might be. So one thing that's interesting about today is that we sort of bounced off of this region and moved higher, or it looks like the opposite happened. We went higher and then closed back in the middle of this region. And so we just have to see now, if I were looking to trade this, I would wait to see, is this level going to play a support, right? This sort of right around $19 region, is it going to end up being support? Or if we fall through it, will it turn into resistance? The good thing about trading, what I'll tell people oftentimes, especially if you're a retail trader and not having some company pay you to trade, is that you can always wait another day, right? You don't have to get in today, because I can look at this right now and say, you know what, I bet tomorrow's going to be a down day and I'm going to go ahead and sell this because in the after hours, because I expect the market to move lower. Or I could say, you know what, I totally think this is going to hold. This area is going to hold as support, and so I'm going to buy right now. No, when I look at this, especially given that we saw consolidation through the daily chart using the moving averages, we saw it on the 1 hour time frame, the 30-minute, and the 15. That just tells me like, hey, market's trying to figure out which way it's going to go. Just take a moment, take a pause, and wait. Like, what's one more day of data? I mean, one more day might let you have a better sense of whether this area is going to be support or resistance, and it'll support you in making your trade decisions. So I don't believe in waiting for all the information to be answered, but there are times where you should just wait and get a little bit more info, and that's kind of where I am on this. So thank you guys once again for watching these videos. Thank you for the comments. I've gotten some text messages from friends as well. You guys are awesome. And again, if you haven't already subscribed, please do go ahead and subscribe. I'm going to be doing a couple of giveaways probably at the end of this month too. So we're going to have some fun. So invite your friends, and thanks so much for watching. Happy trading.